Welcome to the Off Street podcast featuring Adam Reiner and Sean Dan. Off Street contains general information that is not suitable for everyone and contains certain forward-looking statements of future possibilities that, due to known and unknown risks and other uncertainties and factors, may differ materially from actual results. As such, there is no guarantee that any views and opinions expressed herein will come to pass. Off Street is presented for informational purposes, and nothing contained herein should be construed as a solicitation to buy or sell any security or as an offer to provide investment, tax, or legal advice. Additionally, this communication contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to their accuracy or completeness. Adam and Sean are employees of Marshall Financial Group, Inc., a registered investment advisor. For additional information about the firm, including its services and fees, send for the firm's disclosure brochure or visit advisorinfo.sec.gov.
All right, Sean, it is Tuesday, February 20th, 2024, 3 o'clock in the afternoon. Spring training's underway, even though we're not going to talk about spring training every podcast, I promise.
Yes, we are 1 week removed from the Super Bowl. It was a real tough Sunday, turning on CBS and seeing replays of Will Ferrell movies from 2004. Just we're in the doldrums.
Oh, yeah? Which one?
I don't really, like, that was more figure speech than anything. Like, it just felt like on Sunday you're looking for sports to watch, and it's just like old movies and old TV shows. And you're like, man, I miss football.
You know, I'm sure CBS and Fox have to hate it as well.
Oh yeah, all your viewership just gone.
It's gone.
And it's tough because we're in that February period. It's not nice enough to go outside and do stuff yet. Like in the summer, you don't need the sports because you got baseball is kind of on in the background, and then you can hang out. But man, college basketball can only do so much lifting, and Sundays is kind of like a weaker college basketball.
I think
day.
We all know, we being non-avid college basketball fans, that college basketball season starts mid-March.
Okay. Yeah, I guess I should look at it that way. We're only a couple weeks away from we'll get 3 Sundays in a row of really, really good college basketball. Yeah. So I just have to tide myself over for a couple more weeks.
Yeah. Well, the hot story out of spring training is baseball players hate the jerseys this year.
Oh, the jerseys are awful. Pictures of those broke, and players' comments broke this weekend. The new edition of these Nike jerseys, criticizing their poor fit, cheap look, and inconsistent quality. All right on the nose. They look ridiculous on some of these players. Yeah. They look like the iron-on patches that you'd see back in the day. Homemade, just awful.
Yeah, did you see this quote from the one player that said, "Look at the last names, bro. I'm 6'6". This is going to look tiny on me."
It looks absolutely ridiculous. And I mean, Nike, I love Nike. I'm a Nike guy. Of all the brands, you look at Nike as king. This is a huge miss. Like, I don't know how this gets through quality control of.
I feel like this is the difference between baseball and the NFL. I feel like the NFL would never let this happen with their uniforms.
The NFL executed well this year with all the alternates, and I think they all were pretty well received.
Those Eagles Kelly Green jerseys sold out so quickly.
Awesome. But baseball, they can't execute on the alternates, and now they can't even make the regular jerseys right. Yeah. So
they're trying to do things to be modern. they just can't execute it.
You can only do so much when you play 160 games a year. Play so many games on like a Tuesday at 3 p.m.
Yeah.
It's a different breed.
Arizona, Florida, popular locations for retirees.
Great segue.
Right?
Great segue.
Here we go. Between 2024 and 2027, more Americans will be turning 65 every day than ever before.
Yes, this is a great article out of the Wall Street Journal, and I think a super important one too. They talked about in 2024, more Americans will be turning 65 than ever before.
Did I say 25?
I started to say 25.
Just wanted to make sure.
There will be 4.1 million Americans turning 65 this year. And by many measures, those Americans are, quote, wealthier, healthier, and expected to live longer.
And apparently they are changing the norms of what it means to be 65 plus, Sean.
Yes. And they talked with a lot of, I guess, retirement age people in this article. A lot of them are looking to work longer for various reasons, mainly fulfillment reasons, it seemed like, and then expecting to live much better twilight years than their parents did.
One of the popular themes in this article was they no longer view it as a time of winding down their life like maybe their parents did. They view it as just another stage of life where they have a lot of good active years left.
Well, wasn't that the point of retirement? Isn't that what you tell yourself?
I think so, yes.
Why you work your whole life? is so like you're kind of like biding your time and you're saving up that money and you're sacrificing today to live tomorrow. Isn't that what retirement is supposed to be all about?
That's the way I envision it. Though reading the article, the vibe was that prior generations was like they retired.
It's sad.
And
yeah.
they just like, all right, I'm just gonna wait to die now. I'm gonna take my pension payment and off I go.
It's sad. So I guess it's progress, but it is really interesting, like, to see we're in that belly of the baby boomer boom. We're getting through kind of the belly of that curve now. So we have all of these people reaching retirement age. And if you think about it in that context, I think it explains a lot of the macro econ stuff that we've been seeing the past few years of it's hard to get homes because we have a lot of wealthier old people keeping their homes or buying a second home. They're talking about divorce rates from this group are pretty high. So you have a lot of people living alone and independently. Yeah. Not as many people going to those retirement communities and freeing up that housing inventory. And then the spending that they're doing, you said they're looking to stay active. They're playing golf, pickleball. They're going to restaurants. Right? They're spending their money too.
Want to have a purpose.
Yeah.
But yeah, I think one of kind of on your theme there, one of the big things was it's the wealthiest generation to retire so far. There's less guaranteed monthly income through pension payments, but these people have saved more through savings accounts, investment accounts, where yes, they still get, maybe some of them still get a pension. There's still Social Security, but there's other wealth to draw on to do the things they want. They're just not relying on that one check a month to come in.
Yeah.
They have the resources to do what they want to do.
It's making them more flexible in their spending and a lot of times giving them more spending to do too.
Props to them for changing the norms of what it means to be 65 plus. Though with goals of staying active, there is a need for income.
Yep.
Oftentimes investors can be drawn to high yielding investments. They see something with 10, 15, 25+% yield, and it looks big as a big juicy number out there. Though oftentimes there's an asterisk attached to it.
Yeah, so this article was about just generally these high yielding funds. Usually they're called covered call funds is what they're known as. They use options. They follow usually a single stock. The fund family they focused on here was Yield Max, but they basically calculate the yields in a pretty misleading way to make the investor think they're going to get a really, really good deal. And that's kind of the TLDR here of you have these funds out there advertising yields up to 94% in this article, when in reality, one, that yield's not guaranteed. Two, the way they calculate it's pretty misleading, and the actual yield and actual return that you get is often going to be drastically different than what you're seeing.
Yeah, I think this is one of those things that we talk about a lot with our clients, that it's not the yield that matters. It's the total return.
Yes.
Which is the yield plus appreciation or depreciation of a security equals the total return. So you could have something that's yielding 25%, but if the price goes down, it means nothing if your total return is negative.
Yeah, absolutely meaningless. And they give an example in this article. The Yield Max Tesla fund, it's down 8% since inception, whereas the stock has gained more than 9% over the time period. So again, the yield is useless if your total return
you still lost
that.
Money in the end, which I think one of the great quotes from this article that explains the whole thing was from the chief executive of Zega Financial, which manages, I believe, that Yield Max ETF, that said, "You hope people understand that with more yield comes more risk." And then as the author of the article pointed out, which I agree with, once people see a supersized yield, however, they're primed to flunk investing 101.
That's all you can think about. That's all you can think about. You anchor to it. But it is a good, to get back to one of the golden rules of finance. If it looks too good to be true,
there's risk there. There's
should be very suspicious.
Yes.
Very suspicious.
Use caution when seeing products like that. The quote at the end of the article, which I liked, was, "More money has been lost reaching for yield than at gunpoint."
I like that.
Yeah. Probably was a nice way to wrap it up. So let's stick with generations for a minute. We talked about 65 plus. We talked about the baby boomers. Let's talk about your generation, Sean. You're what? Gen Z.
Gen Z. Don't age me like that.
I'm a millennial.
You're a millennial.
You're a Gen Z.
Those old millennials. Don't group me in with you guys.
Well, you Gen Zers are getting multiple polls have found that Gen Zers like you are turning to TikTok for their news unlike millennials like me, which still visit trusted news sources.
Don't. So we've talked about this as well. I think I'm starting to come around to it. And there's a time.
Trusted news sources or TikTok?
The TikTok effect. There's been a couple examples of, I think, kind of those good players, the good people fighting the good fight on TikTok instead of all the scammers around. And this week, there was also kind of in tandem with this, an article about Dave Ramsey that came out that talked about how Gen Zers are also starting to push back against his advice, also on TikTok.
I think this was one of the great stories of TikTok finance.
And the hashtag Dave Ramsey would not approve has 66.8 million views on TikTok. And many people, especially in Gen Z, think Dave Ramsey is out of touch with reality and, quote, really misses any kind of social context. And it seems like Gen Zers are kind of wising up to it and saying, maybe this isn't the most efficient thing. And maybe there are better ways to handle my money. Yeah. Which is why I think maybe TikTok isn't as bad as it once was, if we're having these kind of discussions on the platform.
Okay. So here we'll say TikTok has won a battle.
Tick what?
TikTok. What did I say?
Tic-tac.
Well, back in my day, millennials would eat these things called Tic Tacs, which was like a mint, and sometimes they came in an orange flavor. TikTok, Sean, we'll call it a battle won, though it has not yet won the war.
Okay.
That's my take here.
Okay. I think it's showing growth.
Yes.
Like the fact that we're able to have intelligent conversation and push back on accepted financial advice that maybe isn't the best. It shows a level of nuance and a nuance of understanding. If it's like, all right, I'm not just, TikTok isn't just for pushing a crypto scam anymore. There's people my age and younger that are like wise enough and fluent enough to have good conversations. I think that's awesome.
Yeah. Isn't there like a bigger piece of this though? Since we spent some time talking about generations, to a certain extent, isn't personal finance a little bit generational? I would say for the boomers that are retiring or entering retirement age, their parents probably had different financial preferences than they had growing up. Maybe some of their parents were from World War II or the Depression and very risk adverse, probably no debt. Boomers took on a little more debt to get the things that they wanted. Millennials, Gen Z, probably even more debt since there was cost of college that came attached to it, and that was expensive and had to get financed. You absolutely
almost have to be molded by kind of the financial generation you grew up in, which you have no control over really what the stock market does in the time when you're young. But you talk about obviously someone who grew up in the Depression versus someone who grew up in the dot-com bubble. You're going to have different money scripts and money habits. Gen Z, I'd say, kind of toes a line of we're a little bit too young to really experience the pain of the Great Depression. We saw a really good market kind of when we were coming to financial consciousness.
You think you're a bit too young to experience the pain of I'm also a bit too young to have experienced the pain of the Great Depression, Sean. Us millennials.
Damn. The Great Financial Crisis. Damn. All right, we're one now in terms of slip-ups here. But I'm done with my point. I'm not even going to finish my point now. I forget where I was going, but
I don't know. It sounds like Gen Z on TikTok is saying they want to strike a balance between living today, paying down debt. It sounds smart. Like it's basically comes down to risk transfer. You can work hard, give everything to the bank to pay off debt instead of just adhering to the plan they have in place, like a mortgage, 360 payments get you paid off.
Mm-hmm.
Sometimes it's at your own peril that you spend so much time focused on paying down debt, you have nothing set aside for if an emergency does happen, and you could be in worse financial shape.
Yeah, they're applying nuance and kind of thinking beyond just the rules, which I think is good.
Yes. So bizarre story here. This was one of the strangest finance stories I think I've ever read. Maybe you too. I don't want to speak for you.
If you're steeped in financial Twitter, this was the story of the week last week.
So I'll read the headline of this article, do a brief recap because it's pretty much all right here. The day I put $50,000 in a shoebox and handed it to a stranger, I never thought I was the kind of person to fall for a scam. Like, that makes your head spin by itself. And this is a finance reporter, someone who once upon a time had a weekly article in the New York Times.
This is bad. This is real tough.
So, quick summary. This woman received a call from Amazon, quote unquote Amazon, that notified her accounts were compromised. They had said that Amazon has had a lot of trouble with this. They had a dedicated agent at the FTC.
Federal Trade Commission.
Yes, asked if it would be okay to transfer the call to this agent. The woman said yes. The call got transferred. The agent informed her, oh, there's this big, your name and social security number have been used as part of this larger crime ring.
And they threw everything at. They're like, your name is implicated in drug trafficking, cyber crime. Like, think of a crime. This guy's like, you've done it, and it's under your name. You're screwed.
Everything.
He said there are warrants out for your arrest in multiple states.
Yes, but somehow they couldn't find him. And then this agent said he had to transfer to someone at the CIA.
And all the while, the more she's hearing, she's panicking.
Yes.
And they keep shuffling her around to different people who are upping the stakes and being like, this is worse and worse for you. You should panic. And she's falling for it at this point.
Falling for it. They told her she couldn't tell anyone about it because her phone and computer had been hacked. Meanwhile, here she is apparently on the phone with the CIA, having her phone been hacked.
Yes.
Like, that would go undetected. The CIA asked her for $50,000 in cash in a shoebox that would be hand delivered to someone in a white SUV who she could not look at. And she did all of it.
It's so bad. It's so bad.
You want to pile on and be like, how could you be so dumb?
I hesitate to, in all these sorts of cases, I hesitate to pile on like that because we all do stupid things. We've all done stupid things with money. Probably have more to do in the future. But like the number of red flags, that was obviously a very brief recap. If you actually read the article, it's 15 pages. There's 10 plus red flags that you could mark as to why you shouldn't ever give $50,000 in a shoebox. It all ends up, she realizes she's been duped. She calls the cops. The cops come to her, basically shrug and are like, well, you can take comfort that you're safe. These people have gotten what they want. They're not going to bug you anymore. But just know, someone in the government's never going to ask you for cash in a shoebox. That's ridiculous.
Right.
And like kind of the shame and guilt that she feels now. But
it seems like as it went further along, she started to come to terms with that she was being duped. But then she was afraid because she felt the bad actors already had her. They already knew she had $50,000 on her. And they were going to get it one way or the other.
Along the way, she had revealed so much that they knew more and more information about her that they could use against her. She had even gotten to the point of telling them like where her kids were. Yeah. And like that she had to go pick up her kids and then her kid was in the house. Like she was too exposed at that point, like you said, where she kind of, by the time she gave the money, she may have knew. She probably knew something was going on. But just one of those stories, man, that just reads stranger than fiction.
It's hard to believe it's real.
It's hard to believe it's real, but it just reminds you like, don't talk to scammers on the phone. Like if you have any inkling that this is a scam, just like don't answer the phone. Just don't talk to people.
I feel like if you're really involved in a crime, they're not going to call you and tell you there's a warrant out for your arrest. Like
generally not how they do it.
Right?
But just, I mean, it's a worthwhile article to read, but also like a really good reminder. Just don't be stupid because there's consequences. That's $50,000 she's probably never going to see again. Yeah. Almost certainly.
And she said she's a freelancer now, so she would set this money aside from big gigs to make sure during leaner times there was money there.
Just awful.
But I don't know. Do you ever get any of like those phone calls? Do you get voicemails that are like, "Oh, this is the IRS"?
Oh, of course,
right?
Of course. Yeah. Like emergency, you need to do this now. Yeah, like all that phishing stuff, just emails, ignore. Calls, all that. Yeah. If it's really real, I'm sure the government will continue to badger you until they get a response.
Yeah. The IRS will probably send you a letter in the
brutal.
Speaking of red flags, Lyft had a bit of a red flag during their press release during their earnings call last week.
This was also bad.
They had a fat finger incident.
They, quote, erroneously projected a particular measure of earnings margin to expand by 500 basis points
So 5%.
When in reality, Lyft actually only expected margins to grow by 50 basis points.
0.5%.
It's a big gap.
That's a big swing.
The size of that gap caused the stock to rally more than 60% after hours. It was then on the earnings call that an analyst noticed the discrepancy, not associated with Lyft. A bank analyst noticed the discrepancy, said something to one of the executives. The executive said, "Oh, that is an error. We will correct that." The stock then came all the way back down to up only about 15% after hours.
Yes.
So when we're talking a company of Lyft size, that is a lot of money. And that's like, on the one hand, yes, it's a single typo, but on the other hand, it's a big typo to miss. That report probably goes past a lot of eyes before it gets approved. And for that not to be caught, it's bad.
Yes, the CEO came out and apologized. He said, quote unquote,
sort of.
My bad.
He sort of apologized.
My bad. That was a bad error. But it was 1-0 in a press release.
But it was 1-0.
The 1-0 is a big swing.
About the worst thing you could say. I gotta assume the next day the stock did pop, but I gotta assume someone bought at the top. Someone has lost money in this, so to them it's probably a lot more than 1-0.
Yeah. After hours trading is volatile to begin with
already. Yeah, but it's tough because if that report comes out and someone misspells a word, it doesn't really have consequence. If there's another typo in there and someone said like 51 instead of 50, okay, typo, but it's not going to make a huge difference. An extra 0, 50 basis points to 500 basis points. I mean, that's like that doesn't make any logical sense if you're someone reading that report.
I don't know, I feel like this is the first time I can remember this happening during an earnings announcement.
Yeah, it's a bad miss, and I think the CEO's reaction was a little bit suspect too, to be like, "Oh, it was 1-0."
Yeah,
that's a big miss, man.
It was strange. Friday productivity. Here's the headline: Meeting-free Fridays aim to boost slumping end-of-week productivity. The TLDR here is productivity dips on Fridays. It's not a new phenomenon. Companies been trying to come up with solutions for years. Think casual Friday, pizza Fridays, whatever. Some businesses now are testing out a 4.5-day work week. They said, I don't think Friday afternoon is gaining much traction or productivity anyway. I like it.
I think it's interesting. I would love to see a study if they could do that of a 4.5-day work week versus a 5-day. What does that productivity gain or loss look like? I wouldn't be surprised if people are more productive. You offer that kind of carrot on the stick of let's just lock in for a couple hours instead of the slog of a long Friday that afternoon drags out. If you can look ahead to like, all right, I get to lunch and I'm done. I could see people probably making more of those couple hours.
Oh, yeah. I have to get all this stuff done so I can get out of here on time and enjoy my half day.
Exactly. Or you stay a little later Thursday.
Yeah. Yeah. If productivity's not going to change and Friday's already weak anyway, and you can make it more productive by shortening the day, like, why wouldn't you do that?
It opens up weekends a lot. It's probably a morale booster. It's a huge perk that you can offer. And like you said, unless that productivity margin is huge, which I couldn't imagine it would be if you cut out a couple hours on a Friday, I would think just the psychology of that would probably have a net positive impact.
Yeah. Isn't that what the benefit of all this tech is supposed to do anyway?
Make us more productive?
Make us more productive?
Yeah, that's a whole other argument of like, we're still working 40 hours a week like we did way long time ago when we didn't have all the tech we have today. But
not to mention, I feel like a lot of employees do more than their 40 hours a week anyway during the course of the week.
Yeah.
They either get in or stay late or do stuff at home on nights or weekends. So I don't know. I feel like as long as the work's the same and it doesn't diminish quality at all, like, why not give it a shot?
Good conversation to have.
Yeah.
Good conversation to have.
Sticking with that, here's the flip side of it. Candidate in a race for a Senate seat, doesn't matter which one, it's immaterial to the conversation here, is proposing a $50 minimum wage, federal minimum wage. So nearly a 7x increase from current levels.
Stupid. This makes me mad.
Yeah.
This makes me real mad because I think...
Let's hear it.
I think it's pretty obvious that federal minimum wage probably needs updating.
Yes, fair.
Hasn't risen in a long time. Obviously, high inflationary period. It's very hard, almost impossible to sustain yourself on a minimum wage in most places in the country.
Yes.
What is it, 7.25?
7.25. Yep.
To come out and throw out $50 though, it's just like, it hurts the cause. It's such a ridiculous number that it just kind of shuts down any chance of negotiation.
Yes, that's fair. And we know what would happen. We saw what happens if there's a sudden influx of dollars. We get inflation. It was 21, 22. We experimented with this a little bit during COVID.
It's just not, it's not feasible either. So it's stupid to throw it out there. Like, how do you get stagflation? Pump a lot of money in, high unemployment rate. Like, it's just stupid. Probably only increases inequity as well. Like, just really backwards thinking to say $50 minimum wage. But again, it hurts the cause of like, okay, maybe not 50, but $15, 20, like whatever.
It seemed like in the article there was a lot of consensus forming around that 15, 20, maybe if you're pushing the upper bound of it, $25 number. Then when you go 50, I think, like you had said, it just undermines the whole debate.
It cheapens it.
Wawa, Philly favorite, they are expanding or have plans to expand. So somewhat surprisingly, I was surprised by this number. Wawa's estimated sales in 2023 was $18.5 billion.
It's wild. Wild with a B.
Right. Wawa is not a small mom and pop convenience store chain located, or for the most part, in southeastern Pennsylvania and Jersey. It is a large company.
No, they're up to 1,000 locations, and the family that is the majority owner is worth over $6 billion at this point. Heavy hitter money.
Yes.
Heavy hitter money at this point. But Wawa, as you said, started in the southeast Philly region, expanded to central Jersey, kind of has a presence in that mid-Atlantic. They've pushed all the way down to, I think, a few locations in Florida at this point.
Yep.
But like you said, they're trying to gain more of kind of that southeastern region, and even are going to push towards the Midwest in Ohio and Indiana over the next 10 years.
Yeah. The plans to open 280 new stores in Florida, Alabama, Tennessee, Georgia, North Carolina, Ohio, Indiana, and Kentucky. So trying to take over the eastern half of the United States, I guess.
I'm split on this. I love Wawa as much as the next guy. You do wonder at what point, if they expand too far, does it just become like a national chain? Is it able to keep those Philly roots that it has?
I'm more worried about if they expand into Ohio or Indiana, will they continue to call it a hoagie, or does it become a sub?
Sub, never a sub. Never a sub. I think you keep it a hoagie. They can change their dialogue.
Well, one convenience store analyst, Wells Fargo, who knew people actually track that, said to be successful, Wawa would need to cater to regional tastes. So think like the example was hoagies in New Jersey and like fried chicken at convenience stores in the South.
Again, see, even that, like, at what point do we start to get away from what Wawa truly is?
Yeah. I don't know, like Royal Farms, that's, I guess, southern convenience store chain that started to break in up here, and they stuck with their fried chicken. They're not selling hoagies.
Yeah, that's true. That's true.
But fun fact, Wawa is an ESOP. Like us, we are an ESOP, except Wawa is one of the 10th largest ESOPs in the United States.
There you go. ESOP meaning Employee Stock Ownership Plan.
Yes.
So Wawa is 38% employee owned at this point. Very cool little nugget there.
Yeah. All right, let's switch to uncorrelated. Let's start with the Air Canada story, Sean.
Okay.
So Air Canada has to honor a refund policy its chatbot made up.
Yes.
Just made it up.
Yes, their AI chatbot, which was made with the idea being it would siphon away some of the demand that it has for their live customer service people. Someone reached out. They were looking for bereavement rates on flights. They were going to a funeral. The chatbot kind of just made up a policy where it said if you book the flight now and then email Air Canada within 90 days to say, I need a refund, they'll just give you a refund for the flight. Turns out that's not real. Air Canada said the chatbot lied to you. Sorry.
It was almost the opposite of their policy.
Yes.
It was almost the opposite of what this person
yes,
was
you're supposed to reach out ahead of time
Yes.
before you get the flight. It said just reach out in the back end. Air Canada said, sorry, can't really do anything for you. This guy took him to small claims court, and Air Canada has to at least partially honor what the chatbot said and give this guy a partial refund.
Yes, during the arguments, Air Canada argued that this person should have never trusted the chatbot, and that the chatbot is a separate legal entity that is responsible for its own actions.
Is it like this is a microcosm of like all the naysayers on AI and say how dangerous it can be. It's like people don't want to take accountability. They want to create these AI beings and just like set them free and just be like, I have no control. It's like the chatbot is on your website and then you can be like, he said it, not me.
Yes, like the court had said that Air Canada did not explain why customers should have to double check information found on one part of its website with another part of its website. So they agree with your take.
Yes. And since then, it seems Air Canada has disabled the chatbot on its site. And then in the article, they point out, quote, Air Canada's initial investment in customer service AI technology was much higher than the cost of just continuing to pay workers to handle simple queries.
Yeah.
Tough luck. Maybe a little bit of a backfire there.
I wonder, as more and more companies integrate some type of AI or chatbots into it, if we'll see more stories like this come along, or if this is kind of like a warning.
Oh, absolutely. I think this is about the most innocuous blow up of AI technology that we could see.
Yeah.
And definitely a good like mini warning sign without much consequence.
Yeah. You know, I think in the end it was like $1,000, which for Air Canada is probably very little. For this person that booked the flight, probably a lot of money.
Yeah.
But anyway.
Just ridiculous.
All right, let's switch to this one. So I think during last week's podcast, we had talked about perhaps one of the best commercials during the Super Bowl was the Dunkin' Donuts commercial with Ben Affleck and Matt Damon.
Yes.
And now Dunkin' Donuts is trying to continue to capitalize on the popularity of that commercial by selling the tracksuits that those actors wore during the commercial.
Yes, this is awesome. The tracksuit combo of jackets and pants with the Dun Kings logo on them went up for sale by Dunkin' Donuts for $60 a piece. The initial drop lasted only 19 minutes before they were completely sold out and are now hitting eBay with bidding reaching $300 for the tracksuits.
I think you probably have to be a big Dunkin' Donuts fanatic to go out and buy these.
Yes, but I do. They talked to one guy in there who said it was going to be his Halloween costume in October, which I think this is the perfect Halloween costume.
Okay, that could be.
Like, it's a good niche product. Like, most people will probably recognize it. Those who don't will be like, oh, that's from that Super Bowl commercial.
That's fair.
I do wonder, could more brands get away with this? Like, so many brands, like Dunkin', okay, they have a big following. I know a lot of people love their coffee, especially in the Northeast. But I wouldn't have expected people to go crazy over a tracksuit. Like, think if Starbucks started selling merch, what they could do.
I don't know. I think it's different, though. Starbucks isn't a common man drink. Like
Dunkin'.
Dunkin' Donuts is a common man's coffee, not like Starbucks. That's too highbrow. Dunkin' could get away with this. I don't think Starbucks could.
Okay, that's fair. That's fair.
I don't know who Starbucks would have to partner with. Like a high-end brand.
Cartier.
Yeah.
Starbucks x Cartier. Sterling silver coffee press.
Yeah. I feel like you can go to a job site and you can see people drinking Dunkin'. You have to go to an office building to see people drinking Starbucks.
That's true. I like that take.
All right. Parting thoughts?
Back below 5,000 on the S&P. We broke our streak of up weeks last week. After a bad Friday, we closed slightly negative on the week.
I don't know. I feel like we're in that spot of the news cycle that I hate now. We're between inflation metrics. There was the hotter than expected CPI last week, which, I don't know, we've talked a lot about. Is CPI even worthwhile measure at this point? And now the chorus of overreaction, saying, I don't know, maybe the Fed's not going to cut at all. Maybe the next move's going to be a hike. All feels extremely reactionary. We do this all the time, it seems like. And then the next CPI or next inflation number will come out, and then we'll see.
It's a tough, like you said, it's a tough period where we don't have numbers to look at. So all we can do is create narratives.
Yes.
And boy, we create narratives so far. That thing on Friday of, well, maybe the next move's a hike was just crazy. and got a lot of play. And
did.
people are still talking about it.
It was nuts.
So try to ignore the narratives you can. But next time we get economic data, I'm sure the narratives will have changed 3 times over.
Yes.
So I think it's a good time to just kind of keep your head down and ignore the noise if you can.
Yes. I don't think the Fed is going to change their view based on one number for anything.
No.
If we get high inflation for January, February, March, maybe like we'll see, but it's a long way to go at this point.
Yes, agreed.
All right. Well, until next week.
Until next week. See you then.